Now shifting focus to the international front, stocks rose today as investors paused for a breather after a steep sell-off, but concerns remain about aggressive central bank interest rate hikes and risks of a global recession. MSCI's broadest index of Asia-Pacific shares outside Japan rose 1.3%, edging up from a more than 5-week low and set for its best day in around 2 weeks. Japan's benchmark Nikkei gained 2.22% and gains were broad-based, but China's tech names were also among the leaders, with Hong Kong-listed firms up 1.9%. European shares were also set to extend the previous day's gains, with Euro Stoxx 50 futures up 0.6% and London's FTSE future also gaining about 0.5%. US markets, which were closed early on Monday for a holiday, looked set for a bigger pop after open, with S&P 500 E-mini share futures edging about 1.63% higher and Nasdaq futures also advancing 1.76%. Global investment and financial firm Goldman Sachs has also projected a 30% chance of the United States economy tipping into recession over the next year, up from its previous forecast of 15%, amid record high inflation and a weak macroeconomic backdrop fueled by Russia's invasion of Ukraine. The latest forecast comes about a week after the U.S. Federal Reserve rolled out its biggest rate hike since the year 1994 to stem a surge in inflation, and as several other central banks also took aggressive steps to tighten monetary policy. Goldman Sachs also downgraded its U.S. GDP estimates below consensus for the next 2 years to reflect the drag on the economy. The firm also forecast a 25% conditional probability of the United States entering a recession in 2024 if it avoids one in 2023, adding that this meant that there is a 48% cumulative probability of a recession over the next 2 years compared to its prior forecast of 35%. And now oil prices on the international market rose today on high summer fuel demand, while supplies remain tight because of sanctions on Russian oil after its invasion on Ukraine. U.S. West Texas Intermediate crude recorded a price increase of 2.3% to sell at $112.10 per barrel. Brent crude now sells at $115.90 per barrel, recording an upward price margin of 1.56%. Bonylite's performance maintained its red territory with a price decline of 0.55% to sell at $118.60 per barrel, and for the OPEC basket, crude oil dealers also maintained their price offer at $119.20 per barrel with a price drop of 3.63%.